Well, the CEBA loan repayment deadline is tomorrow, at least for businesses that want a big chunk of that loan forgiven. And some Canadian businesses are scrambling to get their finances together in order to take advantage of that. For many, that means refinancing. A Vancouver-based loan agency says they have seen a surge in applications of almost 30% in the past few weeks alone. For more, let's bring in David Jens. He's the founder and CEO of the small business lender Merchant Growth. David, thanks so much for joining us.
Thanks for having me.
So tell us about what you have been seeing in the past couple of weeks here when it comes to businesses looking to refinance their CEBA loans.
Well, it's been a crazy exponential scramble, I'd call it. People really did leave it to the last minute in a lot of cases. I think that's also because there was a lot of lobbying to maybe try to move that deadline. There was hope around that. So people were kind of sitting and waiting, seeing if that would happen. That has not happened. And we just heard Justin Trudeau yesterday finally kind of come out and really say definitively there's not going to be any changes. And so, some of those holdouts are now scrambling, knowing that deadline is tomorrow. Although some businesses do have until March 28th to take advantage of that forgiveness as well.
Yeah. So, I mean, what does scrambling look like when you're a business and you're trying to get a fairly large loan potentially here? How challenging is that?
Well, Merchant Growth is a fintech, and we make it really easy. We make the application process just like 5 to 10 minutes, and you can actually get through it all by yourself, all online. And so you can get it done pretty quickly, but as a result, we're seeing folks apply today, despite the deadline for many being tomorrow. Frankly, I woke up this morning expecting maybe to see the application flow start to finally drop because, we got the bulk of them yesterday and, and the week prior. But believe it or not, today's going to be even bigger. So folks are scrambling to get it done.
And what are you seeing in terms of the size of the loans that some of these businesses are getting? Is it for, the full sort of 40,000, so it would have been 60,000 altogether that the business received?
Yeah, with CEBA, businesses were either in the 40,000 camp or the 60,000 camp. Most businesses took 60,000 of CEBA, which again, they can repay for 40,000 now, get 20,000 forgiven. So yeah, we're seeing a lot of $40,000 loans go out. Some of the smaller businesses, we can't quite get them to a $40,000 approval. So we're only able to finance part of what they need, in which case they have to contribute some of their own capital to the transaction. But a lot of $40,000 loans, and then those that are in the 40,000 CEBA camp can get rid of their CEBA for 30,000 as well. So we see a fair number of $30,000 loans too.
And the interest rates that you offer, between 12 and 20%, would it be for some of these businesses that are refinancing?
Yeah, I'd call your financing fee is going to be between 12% to 24% on a 12-month term. Where you land in that range, like we run a risk-based pricing model using a lot of statistics. So we're trying to say yes to as many businesses as possible. And obviously, regardless of where you fall in that range, you're going to save a lot of money by refinancing given the magnitude of that forgiveness element. So we're encouraging folks to, in many cases, try with your bank first or your credit union first, those who hold your CEBA loan. That's going to be the cheaper money, but harder money to get. And so we're a great option for all those other businesses trying to get at that forgiveness. Okay,
so if a business were able to go through a bank, they might be able to get a cheaper rate. But if they can't, what would be some of the circumstances that you're seeing of businesses coming to you where they need to go to you? They can't get the money through the bank.
Well, getting bank credit for small business is hard. You typically have to show hard assets as collateral. You have to have real estate as collateral. There's not a lot of cash flow based financing solutions for small businesses. That's why we exist. We look at bank transaction data and other alternative data, and we come up with an assessment of, is this business viable? Do they generate enough cash flow to afford this loan? And offer credit that way. So the unfortunate reality is that, frankly, a majority of small businesses that hold CEBA would not qualify for financing from their host bank or credit union, which is why there's such a big gap that we at Merchant Growth here are trying to address.
What sort of industries are you seeing the most businesses coming from?
A lot of B2C businesses, Main Street storefront type businesses, A wide range of industries, though. Honestly, it's not like there's a single industry that's dominating our funnel. But food service, retail, auto repair, to name a few. But the list goes on and on.
And you said that activity is still fairly strong today. Can you put a sort of number on it, or what are you looking at in terms of the uptick today?
Yeah, we're getting into like thousands of people applying daily, so it is getting to be a pretty big number.
And when you have a business come to you for this refinancing, what would be your hopes in terms of, potentially staying connected with them more longer term, maybe getting some other sort of business? What kind of things do you offer?
Yeah, we've been in business for 14 years. We provide business loans for a variety of purposes. Seasonal working capital, expansion capital. We look at your cash flows and see whether or not we can provide credit based on those. So that's the business we've been in. This is a unique moment where the use case is for CEBA, but certainly we hope to acquire a bunch of new relationships and provide all sorts of ongoing credit going forward with those businesses that have now applied with us.